Hi everyone, this is Jordan at Pure Elliott Wave with your Euro-Dollar analysis for April 7th. Hope you guys are having a good Easter weekend. So the past price action for the last week, we saw a slow, steady rise on really low volume, characteristic of an upward wave and a correction, either B or X. We still are expecting a bull market in the long term. Likely not to go above 1.60380. For the short term, we are looking at a pullback, and we'll have targets, more concrete targets in the future, depending on how high this correction goes up in relation to wave A. So if that price does reach above 1.09826, we'll be labeling the structure currently as a flat. And depending how high that goes, we'll have targets at either the 382 extension or the 618 extension to the downside. So let's zoom in on the weekly chart, get a better view of this. On the weekly chart, we had our previous best fit channel, that minor wave B or X, depending on the deepness here. If it does not reach 90% retracement of wave A, currently it is only retraced 88%, we'll be calling this wave X and this wave W. But when B does go a little bit higher, reach that 90% retracement, we have a target for the downside that varies depending on how high B reaches. I also have two different interpretations of the daily chart, which call for B to end shortly or B to go much higher as an expanding flat. But invalidation to the downside is 0.95364, where wave 2 may not exceed the start of wave 1. If that did happen, this impulsive structure to the downside may not be over. On the daily chart, I have two scenarios for you. We'll be picking up the chart from right here into intermediate 1 and intermediate 2. So currently, I've labeled this daily chart as the highest probability, with minute C being complete as an impulse to the upside within minor B, which was A, B, C expanding flat. And the reason for this is supported by the technicals of volume nearly drying up, but I'll show you the alternate, which expects even higher momentum to come. 1, 2, 3, 4, 5 for C, and 1, 2, 3, 4, 5 for sub-minuet within minuet 5, which signals weakness. If we did see a breach of this best fit channel here, I could signal a bearish reversal confirmed from that, or you could also put a closer trend line which has 3 separate tests right here, which if you were to trade this, it would give you a tighter stop. This wave count expects wave B to only retrace between 90 and 105% of wave A, which would make it a regular flat. And regular flats typically have a much shallower pullback, which would give us a target of 1.04611. When B does complete, we'll be able to calculate an extra target based off the relationship of wave A to C, which they usually have Fibonacci or equality relationships. So let's move on to the alternate, which expects a more explosive bullish movement to the upside. This is our daily alternate for intermediate 2, which shows minor B going much higher as a B wave and an expanding flat. And if B did go above 1.05 or 105% the length of wave A, then C would likely go much deeper, potentially to the 618 Fibonacci zone, which gives us our target of 1.01079. And for this wave, we have minuet 1, 2, and then sub-minuet 3 extending, which we have already completed 1, 2, and micro 1 and 2, which you can see on the hourly chart. So this expects a probably pretty explosive move to the upside shortly, which would likely find rest along the upper edge of this channel, and that wouldn't invalidate B. We would actually invalidate this level if it reached 2 times the length of wave A. So it's still a long ways off. We'll keep an eye on the length of wave B, but I do give the ending diagonal a little bit higher probability with the technicals, which we'll get into shortly. So be advised, we could see a potential upward movement. So personally, I would not short this myself unless we had confirmation below this best fit channel or this best fit channel here, which you'll see on the hourly, which yields you a tighter stop. That would be my personal trading approach in this scenario. Let's zoom in on the hourly chart to this area right here and give our 2 scenarios, one with the ending diagonal and one with wave 3 in progress, exploding higher. So first we have our ending diagonal. We have a pretty close invalidation of 1.10621, which would be when wave 5 exceeds the length of subminuet 3. So for this ending diagonal, it is contracting, which means 1 is longer than 3, and 3 is longer than 5. So once 5 is longer than 3, that would invalidate the contracting ending diagonal. We're also looking for this B wave upward, minor B, to reach at least 1.9826, which would be when that wave is at least 90% retracement of minor A, which happened to the downside before. So once we do hit that 90% retracement, we can label the structure as a flat, and then we'll be asking ourselves, what kind of flat will this be? Will it be a regular flat with a much shallower retracement? Or if B goes much higher and reaches 105% of minor A, then wave C will likely go much lower, potentially the 682 retracement. Right now, if this were to complete as an ending diagonal and retrace 90% of A, then we'd have a target of 382 to the downside. We'll also have targets we can calculate once B completes based off of the relationship of minor A and minor C. So let's look at the second hourly alternate, which sees this moving higher. This is the hourly alternate for the extremely bullish scenario of minute C extending to the upside in this corrective flat. Likely it'd be an expanded flat, with B reaching 1.05 to 1.38 times the length of A. That would give us a target to the upside about 1.10326 to 1.12224, which coincides with the top of this current channel. So within minute C, minuet 3 is acting out right in front of us. Minuet 1 completed back here, and minuet 3 being composed of subminuet 1, 2, 3, 4, 5, and within subminuet we're extending, overlapping with micro 1, 2, 3, 4, 5. So a lot more upward momentum to come in this scenario. What we really need to watch is this best fit channel, which I've mentioned a few times. So watch for this channel to be breached to the downside and volume to increase to the downside. Currently, as you'll see on the technicals, volume has really dried up in this area. Here's the volume data for the weekly chart on the euro-dollar. We've had an extreme drop in volume, not only in the short term, but in the long term as well. Money flow is currently neutral with no signal, and on balance volume has a bullish signal actually, but it's technically weak with only 2 to 3 tests and a steep line. I give the volume more weight in this scenario. On the weekly technical chart, we have no new candlestick patterns here. We had some previous upper and lower long wicks indicating some consolidation. Still have some overhead resistance at the top of the shooting star around 1.1 and some lower support at 1.05. to 1.03. So if we did break down this support in the future, not too heavy on the support through this area. That shooting star did give us a little indication of the lower price action. ADX is showing we are in the very earliest stages of a trend from 15 to 25 and slightly trending up. RSI is currently neutral, stochastics neutral, and we did see an increase in price but a decrease in ATR, which indicates that if we did see a down move in the future, it would likely be much sharper than the recent price action to the upside. When we look at the daily volume data, volume has nearly completely dried up with the recent movement to the upside, which leaves me bearish for the short term. I believe a correction is necessary, and who knows, maybe we'd see it bounce off this support down here, which we'll see in more detail in a moment, but this volume is really bad signal for more bullish movement to come, which is why I'm leaning on the ending diagonal scenario. We did have a bullish signal a few days ago on April 4th, which was back here, but we didn't really see a lot of follow through. Prices remained flat back to that breakout area since then. So we're forming a new range on the bottom here. So if we saw a break to the downside on balance volume, that could be a bearish signal. On the daily technicals, there's a decent amount going on this chart. We still have our left shoulder, head, and right shoulder for the head and shoulders pattern. If this right shoulder reached over the head, it would invalidate it, and our neckline currently sits around 1.055 and 1.06. So a long ways to go for this, but Kirkpatrick and Dulcus note that this pattern in previous studies has yielded about 96% accuracy with completion of this pattern. So be advised that could yield a very sharp down move if this neckline was breached. Recently, we do have a dark cloud cover, which is where the next candlestick opens above and cuts down at least 50% through that candle. This candle did not reach below, so it's very close to a bearish engulfing, but I'd give it a strong dark cloud cover look, which is a strong bearish reversal signal. Moving averages are overall very bullish with the 13 over the 50. If you look back at the weekly chart, you can see the 200, it is sloping up. So moving averages are the full bore bullish market at this time. Overhead resistance sits at 1.1 and support at 1.050. So we're much closer to the top resistance than the lower support. We're in a very early stages of a bullish trend, which is where ADX is increasing between 15 and 25. Once we breach over 25, we'll be in the full flux of a bullish trend. So this trend does have much further to go upwards as per ADX. Stochastics are overbought, which is a bearish signal because we have been consolidating, which leads me, along with the dark cloud cover and overbought stochastics, to favor the ending diagonal count on the Elliott wave. ATR has been declining as price moves upwards, which tells us that in the event of a downtrend breaching this trend line, we'd likely see a sharp movement to the downside. Overall, I think this chart matches the Elliott wave count with potential more upside left in this bull trend, but most likely a pullback to come. This has been Jordan Marshall at Pure Elliott Wave with your Eurodollar update. You guys have a good weekend.